Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the ASX 200. I'm also going to have a look at gold, copper and uranium. So make sure you stick around for that. I'm going to cover the S&P 500 in a separate video. I'll leave a link for that in the description section below. As always, this general commentary doesn't take your personal situation into account. With all of that said, let's get into our first chart. And we've got the ASX 200 on the screen, and it's been another week of volatility. And ASX 200, really, we keep seeing this market swing either side of the moving averages. So I've got the 50 and the 100-day moving averages on the chart, and it seems to be like a fortnightly event where we're either above or below those averages. And the way I'm looking at this, I actually think this market is setting itself up for an upside break. It's been remarkably resilient to all the negativity, the pessimism out there. Consumer sentiment has really been at recessionary levels for weeks now. Yet the ASX 200 continues to hold the line. So from that perspective, it's like if a market can't sell off despite bad news, well then you've got to think, well, is the path of least resistance going to swing the other way and move to the upside? Now, of course, this range the market's been stuck in for months now could persist for a while yet. There are no imminent signs that we're about to get a breakout, but I think it could pay just not to get too negative about this market and be open to the prospect that, look, maybe it could rally despite the expectations of many that shouldn't and that can't happen. Many rallies start from the position of disbelief. Maybe this is going to prove ultimately to yet another. I think that's the way to play this. As long as we hold above this support here at 7,050, that being the bottom of the range. A break beneath there, well, I think that would be enough to put that bullish bias, which I just told you about, on hold. But whilst this remains supportive of the market, I think that cautiously long stock position, which I've been speaking about for pretty much a year now, I think that really does remain the play. And until we get a break to the downside, I think the base case should be that we should be open to the prospect that this market can break to the top side in the maybe later this year. Now, I want to show you another part of the market which I find quite interesting. I had a look at this today. It's an ETF. It's the BetaShares ASX 200 Financial ETF. See the ticker code there, YQFN. And this is interesting because, well, just giving a little bit more data, there's the COVID decline, and then we've got the big rally that came after there. And then for the last 2 years now, so from October 2021 through to, well, nearly 2 years anyway, we've had 2 years of sideways consolidation. And let's just expand this a bit. What we can also do, we can put a trend line. So I'm going to use this high point here, high point from October 21, and draw this along. Now this is an interesting. I'm going to connect these 2 points here to the trend line. But this is an interesting exercise in technical analysis on itself, because if we were to use this high in April, the trend line goes out a little bit higher. I'm bringing it down. I'm using these 2 previous points from late last year, early this year. It's like things don't always exactly line up, so you've got to make decisions on what lines are going to be relevant. And I think the fact we have 2 touch points around the beginning of the year, we've got our starting point. I think that means there's enough balance to draw the line this way, and then this comes supporting potential 4th point, but it is fudged a little bit because it does shoot through. But this is technical analysis. It's not an exercise in precision. A lot of the time, you do need to make judgments, and you need to look at charts and find levels which you think you can broadly work with to manage risk and identify momentum shifts. So I think this is one we can use for identifying a potential momentum shift if we were to see a strong rise up through up through that line, maybe that would be a sign that this large consolidation was coming to some sort of a conclusion. Also got the positive moving averages, prices above the moving average. So yeah, look, there's that's an interesting ETF to keep a look on. Keeping a look at those financial stocks, and because they're a key part of the market. So at the moment, I think this is looking constructive. I think it's looking like it wants to break out at some point. And it's also supported when I look at a stock like ANZ. So ANZ I was looking at earlier today. And what we have here, I'm just going to draw some resistance in. I'm going to link up these high points that have formed over the last year. And when you do that, you see the current price is now butting right into this resistance at around just below $26, above the moving averages. And so keep an eye on ANZ. If ANZ can break above 26, that's going to be a positive sign. And these banks tend to move as a group. And you can look at the other big three, and you can see constructive structures in those as well. So a breakout in the banks, breakout in financials, I think all that would bode positively for the ASX 200. So a few interesting things to keep an eye on. Now jump to the small ords, and it's another sort of story when you look at this. This isn't the small ords isn't reflective of the resilience we're seeing in the ASX 200. It's really struggled over the last few months. It just can't gain traction when it gets a bounce. It is bouncing again off the lower end of this trading range, but it still remains stuck below this resistance area we've been watching around 2,850. So it really is out of sync with what we're seeing in some of those ASX 200 stocks. I think we do have, when you look at this chart, I do think this does look like a potential basing pattern, very much like that Russell 2000 in the US, but we need one of these rallies to really stick, and we need to see it gain traction and start to get above some of these resistance points, or we can start saying, look, this is starting to turn higher. And just like in the US, for a healthy broad-based rally, you need broad-based participation from a wide range of stocks, including those smaller to mid caps. So that's what we're waiting for here, and also watching to see whether we actually do get an upward break in the ASX 200 at some point. Now, if you're getting some value from this, please hit that like button. Please be sure comment, just hey, thanks for the video. It just tells YouTube you're watching and engaging, and YouTube will show other people. And also hit that subscribe button if you haven't already done so, and come and visit me over at Motion Trader. See what I'm doing there, see if it could help with what you're doing with your portfolio. Now, let's jump into some commodities. Let's start with gold. And gold remains in a holding pattern. It's been a pretty quiet week, not much to report, but it is still in this coiling motion, which has been in since June. So several months of coiling up. What has been encouraging is that it's been holding up well despite strength in the US dollar over the last few weeks. It's holding this previous low from August, and I think whilst it's doing that, it does look like quite a constructive setup. I'm still looking at some point for a break above these all-time highs. Whether that's sooner or later, we don't know, but the price action does remain constructive. I'm happy to sit with my positions in gold and a couple of gold stocks until this clears up, until we get fresh signals. I think overall, I think gold is looking okay. Now, I want to have a look at another metal. It's copper. So I'm actually going to start with the copper ETF. This is the Global X Copper Miners ETF. This is the US listing, COPX. There's an ASX listing with the ticker code WIRE, WIRE. But I'm showing the US because it's got more data. Really interesting. It's really been trading within this range now since basically most of the year, basically the entire year. So we've got 9 months, almost 9 months of sideways trading within this range. Now, ranges ultimately break. We've seen big breaks in the uranium range, which we'll talk about in a minute. The ASX 200 is within its own range, and the ASX range isn't actually dissimilar to this. Let me just jump to a weekly chart for a moment, because this is also so quite interesting. So we've got this big rally in copper following the COVID decline, and then this is actually not dissimilar to what we have in the ASX 200. We've got a couple of big peaks, which provides a double top resistance, and now we've got this 6-month trading range, very much like that ASX 200. It's more not so much a case of linking the two together, but just looking at structures, and that's what technical analysis is about. It's looking for recurring patterns of behavior in price action. And so what we've got a strong rally followed by sideways consolidation, and at the moment we have range-bound prices which look like, to me, want to resolve to the upside at some point. Yet to be seen. We need to wait for a breakout. But it is interesting price action to be across. I think the biggest issue for me with copper, so I'm hesitant to buy into copper at the moment. One, it's in the middle of a range, and two, it's out of sync with the metal. We look at the metal, and we still have the copper itself below this overhead resistance that comes in at around $4. Broke down a month or two ago out of this little rising wedging formation. We could see it turn higher from here, but it does still remain vulnerable whilst around these moving averages and below resistance. So I like the overall structure of that copper ETF. Would be a good opportunity, but I think we've got to just wait. We've got to be patient. We've got to wait for this price action in copper to clear up. But it's one of those things to have on the watch list and be aware of, be thinking about. Now, let's wrap up with uranium, and this has got to be commodity of the week. It's and this is also the reward for patience. This has been a long drawn out range, stretched for what's that? Close to a couple of years, just under 2 years in this big range. This is a thing, you just can't get too demoralized during these big trading ranges like the ASX 200 is in now, because ultimately they do break. They don't necessarily all break to the top side, but when they do, you can get some really big moves, and that's what we're getting now in uranium. And it's a case of when these rallies come, they can come really quickly and just leave people caught by surprise who aren't really focused on it because it's not doing very much. But we've had the clues that this was coming. We've had this series of like rising lows. That's been developing over months. It was just a case of sticking with the patterns, sticking with the price action, waiting for the breakouts, buying at asymmetric times. And I said last week I thought this was getting stretched above the moving averages and some sort of consolidation was necessary. But this just shows why I think it's so important to resist the urge to try and pick the high and sell and buy back at a lower price, because so often these markets can surprise you on the upside. And I didn't expect this extra spurt higher. I thought we're going to do some consolidation, but I didn't sell any of my uranium stocks. I'm not trying to be too clever. I'm not trying to get in and out. I'm not trying to pick every little turn. It's staying with these broad moves, because that's where the big money can be made. If this move does continue to extend over the months and over the next year or so, it could turn into a very large move. It may not do that at all, but it could, and that's where the money's made. So I don't want to be trying to capture small moves along the way. If this is going to go, I want to be on it for the big run. And as I say, resisting that urge to take small profits along the way, because that's how you get left out of these big moves. And just quickly, one of the stocks we've looked at in the last couple of weeks is Bannerman Resources, and this just shows how these uranium stocks can play out when they run. It's up something like 50% in just a few weeks, and this is the advantage also of having those. Like, a lot of people will now be saying, well, look, uranium's running. What are the uranium stocks to look at? But there's already a big move in place. It's not an asymmetric entry point. This is why there's such an advantage in having these, being able to do momentum scans and identify stocks as they start to move. And then you can start to consider them. Like, is there a story there? Is there something there that I want to invest in? And Bannerman triggered Motion Traders' momentum signal, momentum indicators back here in mid last month, about 4 weeks ago. And so this is the advantage of being able to scan the market, whether it's through my service or just your own scans. Scan the market for momentum, because momentum really puts a spotlight onto stocks which have the potential to run. And some of them do run quite strongly. So look, hopefully you're on Bannerman or one of several uranium stocks that we've been talking about, and it's going to be an interesting one to continue to follow over the weeks and hopefully the months and maybe the years ahead. So thanks for joining me. Been great talking to you again. Look forward to coming back and doing it all again next week. Until then, bye for now.